Hello, everybody. Okay, well, usually you can't shut me up, but honestly, here we are at the end of the day. The ES changed $0.25. It went down 1/100th of a single percent. I can't really make much of that. There's very little to say. Uh, yeah, so this will be it. I'm gonna do it's not long after the close. I'm not doing another post till tomorrow morning. This is I can't say much about a big pile of sand which is sitting in front of me with no wind. It's like, well, there it is. How about that? My goodness gracious me. So that's what we've got. It started off as a real cool day. Started off nice and down, and semiconductors were getting zapped, and my Nvidia and Intel puts and my Apple puts are doing great, and all that. Then, for no reason at all, the market went blasting higher, and then it went down again, and basically wound up where it started. It was like nothing, absolutely nothing. So yeah, this is not worthy of a lot of new posts. So this is indeed a pile of sand. So what I'm going to do is something a little different and very quickly. Instead of the standard like all history since the beginning of time, I'm just looking at 2-year daily charts, and I'm going to look at the ETFs. I'm going to blast through these because there's 43 of them. I'm going to spend 0 seconds on some of them and a few moments on others, but let's just kind of catch up together. All right, DBC strengthening somewhat. Commodities have gotten out of their descending channel. Maybe, worldwide war is going to be good for commodities, but these seem to have strengthened. Diamonds, it's kind of a whole lot of nothing. In fact, this is screw this line. I mean, who knows where this is going to stop? It's just kind of like, as long as it's under this descending line's fine. But I'm not going to keep moving that horizontal up just because. There's no, don't strike that. There is a meaningful point here. Let's just drag it up there. The meaningful point is this price gap. So we'll just leave it as such. As with everything else, it's the price gap between the 20th and the 21st. So there you go. EEM, boring. EFA, not too boring. It's a nice little head and shoulders. Very gappy because this, of course, is based on overseas markets. It's just the nature of the beast. EMB, interest sensitive, so it's kind of dying. Canada, this is really not worth a horizontal on that one. We're just tidying things up here. Japan, don't care. EWZ, also sort of topped out, but not a lot of clarity here. And let's be very honest with each other. The top is more like that, which isn't really even a top anymore. It's sort of like the last good day it had was there, and it's like jumped into its pattern again. So shrug. Here's China, another big so what. Here is the miners, strong day. These guys blasted above resistance like so, and yeah, I'm glad I don't have those puts anymore. I got out of those a couple of days back. Junior miners, a little more work to do. Their descending trend line is a ways away, but another strong day from them, almost 2%. Gold GLD, I'm giving this another shot. As strong as miners are, I've actually bought puts on gold itself. We'll see. It has breached this red line here, and it's just below this more important blue line. So we'll see if that bombs out too. At the moment, though, we got a nice little doji right there beneath that big blue line. HYG, interest sensitive stuff, had a weak day today. IEFA, very similar to EFA naturally, and also opened weak and closed strong. ITB, home builders, not that interesting, still below that price gap. IWM, very strong day, probably the biggest kind of spoiler of the day. This is up over a full percentage point. We need to, we still have a clean series of lower highs here, again and again and again and again. It's important that we stay under the high from this bar right here, the 11th. If we pass that, the next big test is that blue line again, that Fibonacci. IYR, real estate, it's below that head and shoulders. It's not a very big pattern, so not particularly potent. IYT Transports has breached supporting trend line there. Junk, interest sensitive, so down a bit. KBE, these are the banks. In this instance, it's still beneath this blue dashed line. So strong day there, though, up about 2%. So I've got a number of bank puts, so that was kind of soured the day a bit. LQD down pretty hard, almost a full percentage point. Big next test is whether or not it respects the low we set back on the 6th of October. That big green bar you see there where that green line is anchored. Mid caps, as with small caps, a big day, up over a full percentage point, needs to stay beneath that price gap at 464.10. Municipal bonds down at about 0.5%. We had our nice, beautiful top, tumble, retrace, stopped at resistance, and then retumbling there. So it would be very interesting if we cut below the October 6th low on this one as well. See if interest rates just go completely unleashed. OEF. This is just below. So for like day after day after day after day after day, they're trying to get past this level. They're just kind of stalled out right now. Yeah, volumes, geez, the volumes are very thin on that one. Always. The cubes start off nice and weak. Into the down just a teeny bit, 0.29% BFD. Thanks tech. Silver, as with gold, seems to be at a big resistance point here. This trend line goes back 15 years, and I'd say it's pretty potent. Stop right there. Semiconductors start off nice and weak. Still, the pattern is kind of busted. It really got ruined back here on the 28th of September, and it went uppity up, and yeah, it's kind of a shame that today didn't have any follow through at all, down just a bit more than 1 percentage point. The spider, terrifyingly close to the price gap, 438.43 the gap. Today's high, 438.14. So what's that, 29 cents, I think? Yikes. So very, very scary stuff, but did not breach it. TBT, terribly important. Will this poop out? I'm kind of thinking it will. Interest rates seem super elevated right now. If bonds stay weak, in other words, if this keeps slipping higher, we're in a whole new era of awful with respect to rising interest rates. And having said that, TLT down today, although off its lows, and did not breach the October 6th low. TMF, which our Neo has mentioned to us all, down, it's leverage, so down naturally 3.17%. Very interesting critter there. Oil, right at the price gap, 79.25 the gap, and just 12 cents away from that. So we'll see if Mideast tensions breach that gap or not. XHB, home builders, still medium to long-term bearish. Short-term, the jury's kind of out. It might claw its way back to that pink pattern I've drawn there. Not interesting, not that interesting, not that interesting. XLI, industrials, pretty cool little line there, 103.92. So that's the base of this right triangle pattern. Yeah, that's not very good. I won't bother. I was going to connect these two lines. It's just not worth the time. We'll just leave the base there. XLP, consumer staples, sort of slavishly following, or slavishly, not sure how you pronounce it, the sine wave here. So certainly prone to more strength there if it follows the sine. XLU, I am again the proud owner as of today. I'd sort of like stopped trading this, but I'm again the proud owner of puts on this. We'll see if that's a mistake or not. This flies directly in the face of my bullishness on TLT. Hopefully I'm dead wrong on my bullishness on TLT, but XLU, I'm back in position. XLY, who cares? XME, yeah, not that interesting. XOP, energy, another strong day up over 1%. And XRT, today was the retail report day. This was up 1.69%. Again, the sine wave holding sway. And that is the end of that. I'm going to see you tomorrow morning. See you on Wednesday. Bye-bye.